There's a single clause buried somewhere in your insurance or policy contract that could cost you tens of thousands of dollars, and most people have absolutely no idea it exists. We're talking about a provision so quietly tucked in that even educated, financially savvy people sign right past it without blinking. The clause is called the subrogation clause, and it essentially gives your insurance company the legal right to sue someone on your behalf and then keep the money. So let's say you get into a car accident. Your insurer pays out your claim, and then they turn around and recover that money from the at-fault driver's insurer, and you see none of it. Think of it like hiring a bounty hunter to collect a debt someone owes you. Except the bounty hunter gets to keep the entire bounty, and you just get a thank you card. It sounds absurd, and honestly, it kind of is, but it's completely legal, and it's in almost every policy you've ever signed. Now, to be fair, subrogation isn't always villainous. It does keep overall premiums lower by allowing insurers to recoup losses rather than just absorbing them endlessly. But the problem isn't the concept. It's what happens when this clause interacts with other fine print in ways that directly affect your recovery after a real loss. Picture this. You're injured in a slip and fall at a property. Your health insurer pays your medical bills, and then you settle a lawsuit with the property owner for pain, suffering, and lost wages. Your insurer can then legally file a lien on your settlement and take back every dollar they paid, sometimes leaving you with almost nothing, even after winning your case. There's even a term for this in legal circles. It's called the made whole doctrine in some states, which is supposed to protect you by requiring that you be fully compensated before subrogation kicks in. But here's the kicker. Not every state honors it, and your policy may contractually waive it before you even have the chance to invoke it. The irony is almost poetic. You pay premiums for years, you finally need your insurance to show up, it does, and then it quietly hands itself a refund from your legal victory, like it was the hero of the story all along. And we keep signing these contracts because, well, who actually reads them? We're all just scrolling to the signature line like it's a software update. Here's where it gets historically interesting. Courts have wrestled with subrogation disputes for over a century, and the outcomes shift dramatically based on state law, policy, language, and whether your attorney knew to challenge it. Some of the biggest personal injury settlements have been gutted by this clause because neither the client nor their lawyer flagged it early enough in the process. The lesson from those cases is brutally simple. Before any settlement conversation begins, you or your attorney need to send a written notice to every insurer involved demanding they identify any subrogation interest in writing. That one proactive move has saved clients hundreds of thousands of dollars in recoveries that would have otherwise been clawed back. The misconception most people carry is that their insurer is on their side when it comes to legal recovery. And in the moment of paying your claim, they genuinely are. But once a third party becomes liable, your insurer's financial interest and your financial interest quietly diverge. And that gap can widen into a canyon if you're not paying attention. So what's the practical move here? Read every policy before you sign. Specifically search for the words subrogation, right of recovery, or reimbursement, and ask your broker or attorney to explain exactly how the clause applies in your state. This isn't paranoia. This is the basic due diligence that separates people who come out whole from people who come out confused and shortchanged. The bigger philosophical point is that every contract you sign is a relationship you're entering, and relationships have power dynamics. Knowing where yours sits before you sign is the entire game. Disciplined, informed signing isn't glamorous, but it's the difference between protection and an expensive illusion of protection. And look, even if you've already signed policies with subrogation clauses, which nearly all of us have, that doesn't mean you're helpless. Negotiating subrogation liens after a settlement is a real and often successful strategy, especially when your total recovery doesn't make you whole under the legal standard. The system isn't designed to be transparent about this, and that's not an accident, but now that you know the clause exists, you can't unsee it. Awareness itself is a form of protection. And every contract you read from this point forward is one less ambush waiting for you down the road, whether you're buying property, managing contractors, or financing a real estate deal. The fine print is always where the real negotiation happens. And if you want help navigating those contracts, finding the right lenders, or getting started in real estate investing and home contracting, check out our links in the description below.